Nearly 100 years ago, Henry Ford said that it is well enough that people of the nation do not understand our banking and monetary system, for if they did, he believed there would be a revolution before tomorrow morning. Even though many years have passed since he uttered those famous words, his observation feels more accurate today in 2026 than it ever has before. This does not necessarily mean that banking is evil or that banks do not provide essential services. We all need a place to keep our money safe, and very few of us would choose to bury our life savings in the backyard or hide stacks of cash under a mattress. However, we must face a difficult truth about the world we live in. Banks are corporations, and like any other corporation, their primary objective is to maximize profit for their shareholders. Often, that profit comes directly out of your pocket through methods that are intentionally designed to be difficult to understand. Financial systems have become so complex that most people never realize how much of their hard-earned wealth is being slowly drained away by invisible hands. Whether you are borrowing for a home, spending on daily needs, or trying to save for the future, the system is rigged to benefit the institution first and the individual second. Today, we are going to pull back the curtain on 7 deep secrets about money that the banking industry would prefer you never discover. Let us begin with the first secret, which involves the silent tax on every single card transaction you make. Every time you swipe your credit card or tap your phone at a store, the bank is earning a percentage of that sale through processing fees. You might think this does not affect you because you only see the final price of the item on your receipt. However, merchants and shop owners are well aware of these extra charges, which often range from 2 to 4%. To protect their own profit margins, businesses simply build these fees into the retail price of everything they sell. This means that even if you are using a debit card or cash, you are often paying an inflated price created by the banking industry's processing network. If you buy a high-end computer for $2,000, the bank might be taking $60 just for moving the digital information from one account to another. The store is not going to lose that money, so they raise the price for everyone. Furthermore, banks make massive profits by encouraging you to use credit cards over any other payment method. There is a reason why your mailbox and email inbox are constantly flooded with offers for new cards and high-limit incentives. In early 2026, credit card interest rates have reached levels that would have been unthinkable a decade ago. According to recent data, the average interest rate is now floating between 23 and 25%. Banks have the legal right to increase these rates even further with very short notice. Many customers ignore the fine print in those monthly statements because they are filled with complicated legal language and tiny font. The banks count on this lack of awareness. If you carry a balance and are subject to compound interest, you are no longer just paying for what you bought. You are paying a penalty that grows exponentially every single day. Credit cards can be a convenient tool, but they are designed to be a psychological trap that keeps you in a cycle of debt. The second secret is perhaps the most painful to realize, and that is the fact that you are losing money every year by simply letting it sit in a savings account. For generations, we were taught that the bank is the safest place for our wealth. But in 2026, the reality of inflation has turned that traditional wisdom into a financial disaster. Inflation is the steady rise in the price of goods and services over time, which means the purchasing power of your dollar is constantly shrinking. If the current inflation rate is 3%, but your high-yield savings account is only giving you 0.5%, you are effectively losing 2.5% of your wealth every year. Your bank account balance might stay the same or grow slightly in numbers, but what those numbers can actually buy is disappearing. Banks take your deposits and invest them in assets that grow much faster than inflation, yet they only give you back a tiny fraction of those gains. They are using your idle capital to build their own wealth while your future purchasing power is eroded. The third secret is a legal right that most people do not know they have, and it involves unauthorized charges and hidden fees. Your bank account is a central part of your survival, and you must treat it with the same level of scrutiny as a business owner. Hidden charges often appear on statements under vague names that are hard to recognize. If you notice a charge that you did not authorize, you have a specific window of time to report it. In many jurisdictions, if you report a fraudulent or unauthorized transaction within 90 days, the bank is legally obligated to investigate and often return those funds. However, the bank will rarely advertise this protection to you. They might try to delay the process or make it difficult to file a claim, hoping that you will simply give up. You must remember that you are legally protected, and they are obligated to credit your money back if the charge was not yours. Regularly auditing your own statements is the only way to stop these small leaks before they become a flood. The fourth secret is one that sounds like science fiction, but it is the foundation of modern finance. Your money in the bank is not physical. When you look at your phone and see a balance of $10,000, those are just digital bits and electronic records. The bank does not actually have $10,000 in physical cash sitting in a vault with your name on it. Under a policy known as fractional reserve banking, banks are only required to keep a small percentage of their total deposits as actual cash. They take the rest of your money and lend it out as mortgages, car loans, and business investments. This is how they generate their massive profits. They are essentially gambling with your deposits to earn interest from other people. This system works fine during stable times, but it becomes a major problem during a financial crisis. As we saw in previous market crashes, if too many people try to withdraw their physical cash at the same time, the bank simply cannot fulfill the requests. Your money is safe in the sense that it is insured by the government, but it is not accessible in the way most people imagine. You are participating in a massive digital experiment where your wealth is being used to fuel the bank's growth, not yours. In 2026, the level of financial surveillance has reached an all-time high. Banks are required by law to monitor every single transaction for what they call suspicious activity. But it goes deeper than just the $10,000 limit. Banks also use artificial intelligence to look for patterns of what they call structuring. This is when a person makes several smaller transactions to avoid hitting the $10,000 threshold. Even if your money was earned legally and you have paid all your taxes, these automated flags can trigger an audit or a freeze on your account. The IRS can scrutinize these records and demand detailed explanations for how you spend your own money. In the modern world, your bank is essentially a deputy of the tax authorities, reporting on your financial life without you ever knowing. The sixth secret is the dark world of overdraft fees and how they are used to target the most vulnerable customers. Overdraft protection is often marketed as a helpful feature that prevents your card from being declined at the grocery store. In reality, it is one of the most profitable products a bank offers. If you make several small purchases in one day while your account is negative, those fees can stack up to hundreds of dollars in a matter of hours. Banks often process transactions in a specific order, clearing the largest charges first to ensure that your balance hits zero faster, which allows them to charge more individual overdraft fees on the smaller items. This practice has been criticized by consumer advocates for years, but it remains a primary source of revenue for many institutions. The best way to protect yourself is to opt out of overdraft protection entirely. It is better to have a card declined once than to wake up to a massive debt created by a few cups of coffee. Banks often impose monthly service fees just for the privilege of holding an account. They might waive these fees if you maintain a high balance or have a direct deposit. But for many people, these small $10 or $15 charges add up over time. Further, many people have hundreds of dollars leaving their accounts every month for services they no longer use or have completely forgotten about. The banking system is not designed to help you catch these subscriptions. In fact, the more money that moves through your account, the more data the bank has to sell to advertisers. To build real wealth in 2026, you must become your own financial gatekeeper. The goal of the banking system is to keep you in a state of mild financial confusion. They want you to feel that money is too complicated to manage on your own, so that you will continue to rely on their expensive products. But the truth is that building wealth is about simple, consistent actions. It is about avoiding high-interest debt, understanding the impact of inflation, and keeping a close eye on where every dollar is going. Do not let the bank be the master of your financial future. Understand their secrets, learn their rules, and start using the system to your advantage instead of letting it use you. The more you know about how the money game is played, the less likely you are to lose. Financial independence begins with the realization that no one cares more about your money than you do. Take control of your accounts today. Review your statements for the last 3 months and identify every single fee and subscription that is draining your wealth. Call your providers and negotiate better rates, or move your money to institutions that actually respect your business. The revolution that Henry Ford spoke about does not have to be a violent one. It can be a personal revolution where you decide to stop being a victim of the system and start being the architect of your own freedom. Your future self is counting on the decisions you make right now. Make sure they are the right ones.